This Week in Economics on the 15th of January 2018, coming to you from WBRN Radio in Boston and on the Bostonred Network. This is our macroeconomics program, incidentally. We'll start this off with the Producer Price Index, which was out on Thursday, the 11th of January 2018. This is by the Bureau of Labor Statistics. The index for final demand fell 0.1% in December. Seasonally adjusted from the Bureau of Labor Statistics reported the final demand price advanced 0.4% in both November and October. On an unadjusted basis, the final demand index climbed 2.6% in 2017 after a 1.7% rise in 2016. So it was more of a rise, I guess we'd say, in 2017 as in 16, almost 1 percentage point, not quite, well, yeah, actually 1.1 percentage point. Most of the December decline in the final demand index is attributed to 0.2% decrease in prices for final demand services. The index for final demand goods was unchanged. Prices for final demand less food, energy, and trade services edged up 0.1% in December after rising 0.4 in November. In 2017, the same index for the final demand less food, energy, and trade services climbed 2.3%, followed by a 1.8% advance in 2016. Final demand services, the index for final demand services moved 0.2% in December, following 9 consecutive months increase. Most of the decrease can be traced to a 0.6% decline in margins for final demand trade services. Trade indexes measure change in margins received by wholesalers and retailers. Prices for final demand transportation warehousing services fell 0.4%. Conversely, the index for final demand services less trade, transportation, warehousing inched up 0.1%. Product demand, a major factor in the December decline in prices for final demand services, was the index for automotive fuels and lubricants, retailing, which fell 10.7%. The index for loan services, partially airline passenger services, apparel, footwear, accessory retailing, legal services, health, beauty, optical goods retailing also moved lower. In contrast, prices for inpatient care advanced 0.7%. The index for truck transportation of foreign and apparel wholesaling also increased. The final demand goods prices for final demand goods were unchanged in December, following a 1% increase in November. The index for final demand less food, energy advanced to 0.2%. Conversely, prices for final demand food declined 0.7%. The index for final demand energy was unchanged. And these are some of the indexes here. If we look at December of 2016, energy was 1.9, food 0.3 there. And if we look at this year, food was a negative 0.7, and energy, we don't have anything there for energy. And while intermediate demand in December, prices for processed goods increased at 0.5%. The index for unprocessed goods rose 2.1%, and the prices for services edged up 0.1%. Processed goods for intermediate demand, the index for processed goods for intermediate demand climbed 0.5 in December, the fifth straight month increase. 70% of the December rise is attributed to the 0.5% advance in prices for processed materials, less food and energy. The index for processed energy goods also edged higher. You can see that what's happening to Brent crude, increasing 0.8%. Conversely, prices for processed food and feeds inched down 0.1%. In 2017, the index for processed goods for intermediate demand climbed 5.1%, compared with a 1.8% advance in 2016. In December, a major factor in the rise in the index for processed goods for intermediate demand was the price for plastic resins and materials, which increased 3.1%. The index for basic organic chemicals, diesel fuel, jet fuel, residue fuels, prepared animal feeds also moved higher. In contrast, beef and veal prices fell 6.3%. The index for gasoline and plastic construction products also declined. The unprocessed goods, the index for unprocessed goods for intermediate demand increased to 2.1% in December, following a 3.2% rise in November. Nearly three-fourths of the broad-based December advances is attributed to prices for unprocessed energy materials, which climbed 4.7%. The index for unprocessed non-food materials, less energy and for unprocessed foodstuffs and feedstuffs also moved higher. Increase at 4.1% and 0.5% respectively in 2017. The prices for unprocessed goods for intermediate demand rose 5.2% after advancing 13% in 2016. Over half of the December increase in the index of unprocessed goods for intermediate demand can be traced to natural gas prices, which jumped 13.7%. The index for carbon steel, scrap, crude, petroleum, raw milk, I don't know how that got in there, slaughtered and gilts, slaughtered steers, heifers also moved higher. Conversely, the price decreased to 3.3%. The index for fresh fruits and non-carnivorous scrap, I hadn't seen that one around before. Services for intermediate demand, the index for services for intermediate demand edged down 0.1 in December after a 0.7 jump in November. The decrease can be traced for prices for services, less trade, transportation, warehousing, and intermediate demand fell 0.1% there. Leading the December decrease in the index for services demand, prices for loan services partially dropped to 5.4% of the increase for the index for legal services, airline passengers, machinery, equipment parts, supplies, wholesaling, staffing services all moved lower. In contrast, prices for security brokers dealing investment advice related services increased 1.4%. The index for television advertising sales of metal and materials and wholesaling, truck transportation, and freight also rose. Not sure why they put those in there as they did. Anyway, stage 4, the intermediate demand, the index decreased 0.2%. And let's see how far we're going to go with this. I suppose we'll do this. Decreases in index for loan services, legal services, machinery outweighed rising prices for diesel fuel, portfolio management services, security brokerage, deal investment advice, and related services. The index for stage 4 intermediate increased 3.3% after climbing 1.7%. A lot of that because of the new tax legislation. Stage 3 intermediate demand here, total for goods climbed 0.1%. That's in stage 3, they call it. And let's see what we have in here. Raw milk, organic chemicals, slaughter, boars, the gilts. Anyway, I think we went through that once before. In 2011, prices for stage 3 advanced 2017, 8.4%, following a 2% rise in 2016. I won't go over these stages here, but basically that is it for the producer price index. On we go. That's the U.S. part of this, parts of this puzzle here. Let's see if I can find the other part here. Oh, we have to go down here. Sorry about that. We'll eventually get it. This advanced sales for retail and food services in December. This is released on the 12th, which would have been Friday, announced the following here. The advanced estimate of retail food services. Let me just get this up a little bit here. I've got it. Anyway, we've got it now for sure. So advanced monthly sales in November, it was revised to 2017 to 493.6 billion. In December, it was 495.5 billion. Basically about the same. Okay. Advance U.S. retail and food service sales for December of 2014 adjusted here, but not for price changes. We've already given that. An increase of 0.4 from the previous month, 5.4% above December 2016. Total sales for 12 months of 2017 were up 4.2% from 2016. Total sales for October 2017 through December 2017 were up 5.5% for the same period from the same period a year ago. The October 2017 to November 2017 percentage change was revised 0.8 to 0.9. Retail sales were up 0.3% from November of 2017 and were up 5.6% from last year. Non-store retailers were up 12.7% from December 2016, while building materials and garden materials supply dealers were up 9.9%. We heard quite a bit about that in the press. The January 18 Advanced Retail Report is scheduled on the 14th of February. And let's see what else we got here. Let's just explain the report. I guess we've got nothing here. Okay, now we'll go to our roundup here. We'll start off with Reuters. The euro hit a 3-year high as Europe leads global optimism. Last week we talked a little about this. The European Central Bank, which, the change from pro-European Union coalition in Germany also boost confidence. The chance, of in the continent, with the world in general and Europe in particular showing signs of sustained economic growth. But, it's sort of mixed up a little bit. The view was given for fuel last week by an account of ECB discussion that suggested that policies may soon start preparing the groundwork for a reduction in support. The single currency climbed actually 0.8% to 1.22965 on Monday, the last time it's seen since December of 2014. The Bank of Japan also has a positive view there. The German Chancellor Merkel party and the Social Democrats are moving towards forming a coalition there. Well, maybe not. Davos, we have that coming up very soon also. The Eurozone money markets now price in a 70% chance of 10 basic points increase by the European Central Bank. Stocks in Hong Kong jumped 9/10 on Friday. Investors were optimistic that the Chinese gross domestic product for December, a quarter due out on Thursday, will be 6.7%. Earnings for the S&P 500 companies were expected to average 12.1% in the quarter. That's the Thomson Reuters thing. Now, the dollar, of course, is down. Dropped on fresh, let's see. Wrongs on Monday with strength in the euro. Well, that's no big deal there. The Brent crude also did a little bit of falling. This is where we get into the Brent crude up at $70 an hour. You remember one time it was over $100 an hour. West Texas crude at about $64. We'll get that in a minute. Production cutting pact between OPEC, Russia, and other producers have given strong tailwinds to petroleum prices, with both the benchmark last week hitting levels not seen since December 2004. Bank of America's Merrill Lynch raised its 2018 benchmark forecast to $64 a barrel from $56 a barrel, 430,000 barrels per day. We looked at that a little bit here at Cranston, and I'm not certain if that'll be maintained. $64 a barrel seems to be a little bit optimistic, but we'll see. U.S. energy companies added 10 rigs. This is from the Baker Hughes, is now part of GE, to the week ending the 12th of January, taking the number to 752 rigs. In Canada, firms almost doubled the number of drilling rigs, last week to 185, the highest in 10 months. Let's see here. U.S. production to grow by 600,000 barrels in a Q1 compared to last year. And from a fundamental perspective, the surge in U.S. managed money raises a clear and red flag. For us, we see the U.S. complex as decidedly bullish over the next 2 months. The surplus in crude is expected to widen to levels that will overwhelm the market. That's according to the Viennese consultancy JBC. So there's some looking at this as sort of it's clouded by the rise there. In China, GDP growth, we talked a little bit about that. On Thursday next week, we'll have it 6.7 is what they estimate year over year, down from 6.8. What this would indicate, if in fact this does happen in China, is less growth in China. This will start to impact the global situation. As we covered Davos, which is coming up here, the World Economic Forum. We'll hear a little bit more from the financial gurus as to where this is going. But GDP growth for the full year of 2018 could slow to 6.4 from an expected 6.8 in 2017. That is 0.4 of a point. China needed to do some adjustment in cooling off. You're not going to have 7 and 8% GDP in China. So we'll start to looking at some of these factors here that a little optimism. Anyway, forecast for December quarter range from 6.5 to 7 with models upside surprise tips. Said the economy is expected to grow, 6.9 this year. China will release, of course, like we said, on Thursday, so we'll wait for the release. Economist poll estimated GDP grew 1.6 over quarter. There, China's exports and import growth slowed in December. This is to be expected. Solid exports had been a boom for China policymakers, but world demand is less. And this is where we start looking at it, especially in our seesaw model. Anyway, policymakers told Reuters previously that China will keep its GDP targets around 6.5% in 2018 in a balanced effort to reduce debt risk while keeping the economy on a safe footing. Very good idea there for the Chinese. So basically that's it. China's commodity buying spree eased slightly in December with copper, iron. And we talked a little bit in the producer thing segment, I should say. Let me get a little more formal here. Crude oil falling from bumper levels a month earlier. Retail sales are seen growing at about 10.1% in December from a year ago. Over 10.2 in November. Fixed asset investments predicted to increase 7.1% in 2007, easing from 7.2% in January, November. Now let's switch to the UK here, and I'll look at our time a little bit here. All right, we're doing well. The collapse of the second largest construction company in carillion in the BBC, in the UK. That's the second largest construction company there. Came after talks between the firm, its lenders, and the government failed to reach a deal to save it, and the failure means the government will have to provide funding to maintain public projects that carillion had going there. All employees should keep coming to work, and you will continue to get paid. The staff that is engaged in public projects. Carillion is involved in major projects such as HS2, high-speed rail track, as well as schools and what have you. It maintains 500,000 homes for the Ministry of Defense. It's the second largest supplier of maintenance services to the National Rail. So this is really one company which provides services for Carillion's prison contract. Told the BBC that it might fail if it's not paid. Let's see. 80 million pounds it's owed. And let's see what else here. There's 800,000 pounds. Anyway, it happens next depends on the actions of the court. They're in this procedure here, and the government has always said it is supporting public services, and other firms are likely to take some of Carillion's other contracts, etc. But it does have a big. The government refused. This is by Simon Jack. Refused to insure Carillion's debt, so the banks had just pulled the plug. The whole point of having private companies do public work is that they should shoulder some of the risks. The truth is the government has long been helping out Carillion for a while, awarding contracts it knew the company was in trouble. So this is a prop job basically here. Funds be managed by the Pension Protection Agency. This is a UK matter, so we won't go much into it, but schools manages 900,000 buildings nationwide, holds 200 million in prison contracts. So this service is basically something propped up by the Tory government, period. It has some construction projects for the 2022 FIFA World Cup in Qatar, and some of the other stuff that it is involved in. We won't go into all of it. Nonetheless, a little short today. We'll do the numbers now. The FTSE all share, that's today in the negative 3.32. In Amsterdam today, negative 0.55. The DAC at a negative 36.03 there, or not 3, however you want to do it. In Paris today also negative 3.39. In Brussels 1.92. In Madrid 28.60. In Zurich today negative 5.47. And in Moscow on Friday 15.93. In Johannesburg on Friday negative 294.82. In Bombay today 251.12. In Karachi today on Monday negative 586.23. On Friday in Lahore negative 45.11. In Colombo on Friday negative 22.61. In Tehran today 715.40. In Sydney today also 10.90. The Nikkei today at 61.06 and not 6. The Hang Seng today in negatives 73.67. In Shanghai today negative 18.45. In New York, that was on Friday, 228.46. The Nasdaq was at 48.28. And the commodities market out in the Midwest city of Chicago at 18.68. In San Pablo today, 1,046.17 in the negative. And on Friday in Mexico, 648.42 in the negative. And to Brent crude, what we were talking about here, where the markets are, it is down 13 cents on Monday at $69.74. Brent crude, the spot, is up 61 cents at $58.59. West Texas crude is down 2 cents at $64.28. T-Boone Pickett jumped for joy, even on a $15 bill. Oil, it's over that now. That was at $70. Anyway, gold was up $10.10 at $1,343. I'm going to have to research this and find out why gold was up. This the Forex index. Dubai gold was up $13.50 at $1,337.70. Silver, no change, $17.12. The Euronext Life Futures. Cocoa was up $3. Cocoa futures. Corn futures down $2.75. Robusta coffee down $6. And white sugar futures, not sure why we give this one, this down $4.20. The Bloomberg Commodities Index from Wednesday, 85.59. So this does it for the numbers. I guess one we didn't get in here. Chile complains of a World Bank on fair treatment. Here, fake news was becoming fake statistics. I'm not sure what this is. He was reporting. He was responding to an interview given by the bank's chief economist Paul Roma, who said indications from Chile may have. Indicators from Chile may have been manipulated for political reasons to show a decline in Chilean business conditions. The World Bank has ordered an inquiry. In an interview to the Chilean paper, El Mercura, the World Bank economists have been responsible for ranking. Who is this? Augusto Lopez Carlos said changes in methodology took place in a transparent, open context, denying any political bias. Chile currently ranks 55th out of 190 countries in the World Bank's closely watched annual doing business competitive rankings. It has been 34th in 2014, the year of the Socialist President Michel Bachelet took office. What happened with the World Bank's competitive ranking is very concerning, said President Bachelet, whose four-year term ends in March. Ranking that international institutions conduct should be trustworthy since they impact on investment in the country's development, she said, asking for a formal investigation. Mr. Munoz called on Twitter for the bank to calculate the possible loss in foreign investment because of doubts caused by a lower competitive ranking during the administration of President Bachelet. Anyway, Chile's presidential elections last month were won by a conservative business type, Sebastián Pirela, against Bachelet, the preferred candidate, Alejandro Guerra, in part on promises to slash red tape and boost investment. Well, he won't be boosting it very much here because of the ranking. Currently, it's 55th out of 190 countries, and it used to be 34th. Well, still not bad. Better, as they say, they're in the business and not being in the business. This will do it for us. We'll have some more information out. In terms of new tax law, I was looking at home improvement loans, of all things. Those are that people take out on their homes, and they can pay it back, use it for renovation or for credit card consolidation, etc. And they could write that interest payment off. Now they won't be able to do that, and that will lessen some of that particular trade. But still, in terms of what the interest would be, say, if you're consolidating your credit cards, depending on what you're paying. If you're paying 9 or 10% or whatever the rate is, if you consolidated on one of these loans, what you'd be at 5-6%, something like that, you would definitely save money. And of course, in most places, the prices of homes have risen. I was talking to a lady; her house had risen by $100,000 in terms of its value within a few years. So, in other words, since the Depression. So, in other words, in some places, people can afford to get those loans. For instance, I think they said the average, is, depending, is a $100,000 line of credit or something like that, and people take out 30 or 40% of that and do what they need to do, probably consolidating a debt or paying off debt, or perhaps paying off debt on a car, whatever they're doing, and then just have that payment moving along. Anyway, that was one of the little caveats we were able to find. We'll see you next week. For those in business, make this week a productive one. For the consumer, the eye on the prize. Incidentally, we didn't mention this, but various operations, including Walmart, raised their workers, full and part-time, by $1. So they were moving to, a $11 an hour or $12 an hour. The banks had raised their rates for workers to around $15 an hour. This is Wells and various other banks there. Some of that's phased in, some of it is not. That is part of that particular situation. But also at the same time, there were 63. Now, I saw different numbers there, but the 63 Sam's Clubs are named after Sam Walden, the late Sam Walden. Anyway, nonetheless, and some of those clubs, I think about 10 of them, will be turned into fulfillment centers. The others, the workers, will be made redundant. More workers in retail trade being made redundant. That will affect the quarterly reports, your weekly reports, jobs reports, monthly reports, I should say. So January should be a little. Normally January and February, particularly January, the jobs report is usually always low. That's been a historic situation because of the winter, the trades, and many of those are laid off, and some other things that are happening there. You have people that are on holiday the last 2 weeks of December into the first week of January. So now people are back to work again, and a lot of this will depend on energy costs. If you have natural gas is up, and in most of the nation, this has been a brutal winter. So those are some things you're going to see, and also what happens in China in terms of demand, particularly for raw materials. We'll see that some of that, those prices have been creeping up, which you'll see inflation also creeping up. So the Fed is scheduled to take or to do 3 interest 25 basis points probably increase over the next 12 months. So you probably will see that. And also we talked about some of the political considerations, but on this Bostonred Red, our political program, that's what happened in some areas. You have 4.1 unemployment and redundancy, but at the same time, in some areas, it's much more acute. And there was a trucking company in Jacksonville, Florida, that transported, I believe, petroleum. Had a 600-person operation going there. Could have added 60 more people, had to work, but not the workers. And that is something that's happening across the trucking industry, because usually people go in that industry a little bit older. I forget what it is, 23, 24 years old, to start as a truck driver, and then various tests, etc., that have to happen there. And the working conditions are a little bit different also. So it's not as easy to get workers. And there are other jobs also, construction jobs. During the Depression, the many construction sites closed down, as euphemistic called, went belly up. So workers were forced for several years to leave the trades. So though they survived, some left the country, but nonetheless they moved into other trades and are probably not going back into construction again, because construction is not on a massive scale that it once was. And this other report I just talked about, this is a rehabilitation, a renovation of houses, etc. That's a big thing in home construction. That may or may not. December was a very big month for that. We were looking at some figures there. If I have time, I'll grab it up. Usually when we're doing this, we do a lot of review of many different items, and I'm not sure we'll find it. It's probably hidden away from us now. Well, remodeling future. This is at a place for the Joint Center for Housing Studies at Harvard University of all places, and remodeling. Well, anyway, I don't know. We have it here. We don't. But we were looking at some of this. Maybe I'll append this to where you can look at it and see what is going on. See if we can get even the executive study here. I'm not sure. Let's see if we can. Well, this is for 2016. Housing prices rose 5.6% in 2016, finally surpassing the highs of a decade earlier. That's a little bit telling one a little bit what's going on. The increase in housing prices were widespread, and gains in 97 of the 300 different markets here. This is the 97 executive summary here. I thought we were, wait a minute here. Well, actually, this is of 2007. I'm not certain why we are getting, maybe I'm just not far enough along in the report. But this is by that particular center. I'll append this on. This is 2016. And this is just the executive summary. The future course of home ownership will also be shaped by how affordable local housing prices are. For typical renters, on the average, 45% of renters across the nation's metros can afford payments on a medium-priced home. The share ranged from less than 1 in 10. So some of this out here is changing because of the new tax laws. Regardless of location, the cost burden of sharing amongst lower-income households earning under $15,000 a year, roughly equivalent to working full-time year-round at a federal minimum there. I think that's $9 and something cents. So some of the anecdotal information put out. Anyway, we'll put this on. It's easier just to do it that way. This will do it for us. Good day.